What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is February 8th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are, and today we're going to be talking about a very important topic in the broader term of cryptocurrencies, and this has to do with understanding where we are in a given Bitcoin or cryptocurrency market cycle. Now, today I'm not only going to be talking to you guys about where I think we are at the given moment, or at least I can guesstimate where we are, but along with that, giving you guys the tools that I use to gauge where we are in market cycles so you can actually do your own analysis by yourself as well. So without further ado, we're going to be diving into these indicators, and I'm also going to be providing a little bit of perspective as to where we are. If you're interested in either of those, I recommend you guys stick around. Now, real quick, I just want to let you all know I am going to be speaking at Tokenomics Battle of the Blockchains in Bangkok and Thailand. If you guys can make it, there are discounted ticket links down below, and I'd like to see you guys there if you can make it. Alrighty, so let's go ahead and talk about some of the simpler indicators, then we'll dive into some of the more detailed ones as we go. They all play a very relevant role. The first one has to do with key price levels, and this has to do with the very simple measurement of resistance and support. Now, this does not require any crazy indicators. This is simply put into the chart so long as you're using a candle chart, and you can actually get a very good gauge as to where a financial asset, whether it be Bitcoin or stocks, is hitting serious levels of resistance and support, or basically where there are barriers to higher prices, or there is support for possibly reaching higher levels later down the road and being able to hold at a certain level. Now, why does support and resistance play a key role here? Well, they play a good role in the short term here in the sense of Bitcoin. So we can take a look here at some of the 2017 cycle. We're taking a look at a weekly chart here, so each of these candles represent a week. We can see here that big even levels like 3,000 serve as great levels of resistance and support. It's a level where human traders, for example, for some odd reason, I think we really like big even numbers, we tend to see that this might be a level where we can spot some kind of resistance in price. And this is exactly where we had resistance. Back during the early days of the channel, we talked about this. And along with that, once we actually recovered here, it started moving higher. The next level we were watching was for 5,000. And again, we called it on that because it's a big even level. And the one thing that I said to wait for was for a retest of the lows here on previous resistance. This is another rule here. Previous resistance tends to become new support. So this is a really good way to kind of gauge things in the short term, right? But when we're talking about major market cycles, how does resistance and support play into the broader term of things? And along with that, what kind of key levels do we want to look for? Well, we not only want to look in the sense of Bitcoin for similar levels of percentage correlation and decline from the peak. So for example, if it's tended that when Bitcoin peaks out in a market cycle that we see an 80 to 90% drop, you want to expect that you'll probably see something similar to that, especially if the run-up is similar to previous run-ups. But the big thing you can look for here is when you're looking for a correlation or a correction in market cycles, you want to look for a level that was very important to Bitcoin during the previous cycle, one that might have served as very strong resistance, but also might have served as support for the continued run-up. And I think in this case, this is where we want to look right here. A good example of this is 3,000. And the reason I say that is because we've had very clear resistance, and we also had a major clear rebound off this level. So it's imperative that Bitcoin continues to prove that this is going to act as support. So that's the main thing here. You want to see previous support, very key levels of support, continue to play out. So in this case, I think it's going to be around 3,000. But again, we'll have to see if we're going to be looking for a lower level here on Bitcoin. It might be, as some proponents can claim, I don't have it on the chart here because I'm looking at Coinbase. But if you go on Bitstamp or a variety of other exchanges, many people would correlate back to the previous high of Bitcoin all the way back in the first major market cycle, where Bitcoin had topped out at around 11 to 1,200 in this case. So that's where some people believe it could go to. But again, I think it's much more relevant to look from the previous upward cycle in Bitcoin. Alrighty, so we've talked about that enough. Let's go ahead and talk about the second thing, and this has to do with moving averages. Now, I don't look at the 1 hour chart or the daily chart with the moving averages. Sometimes I'll look at the daily chart if I'm more trading in the short term or swing trading. But if I'm swing trading the major market cycles, then I'm going to be taking a look at the weekly and the monthly. And the weekly and monthly gives a lot of insight as to where we are in the broader term of things. Now, I don't care so much about the 50 and the 100-day indicated by the green and orange line here. I care about the 200 MA in this case, or the 200 weekly moving average. And right now we can see not only that this is providing support for Bitcoin right now, but actually bringing it over to Bitstamp real quick, we're actually able to find this is played as a very key level of support in the past. We could see that Bitcoin found a double bottom here on the 200-week right before it continued to rally onward. Now, the 50-week here is one of my favorite indicators, but also tossing into this category of moving averages, the other indicator that's very similar in regards to the time frame, if you kind of do the math here, is the 50-month, right? So 200 weeks is relatively close to 50 months in this case, but they're also separate key indicators that I like to use. We can see the 50-month here had support right here, right before it went off on the rebound, and we're very close to that 50-month here, right? So we haven't made full contact with it, not to mention it might turn out this time we have to ride along the 50-month and find a base here for the bottom, but it at least tells us that the majority of the sell-off has most likely come in if we're going to follow what's historically happened, right? I'm not saying it's guaranteed, but historically speaking, the last time we saw this is where we were able to find support. Same with the 50-month as well as the 200-week, all right? So moving averages, very important in that case. Now, we've talked about two of these other indicators. There's one more that I want to take a look at on the chart here, and that has to do with the RSI. And interestingly enough, this is the indicator down here, the relative strength index. We can see the RSI has a very similar pattern to the moving averages on both the monthly and the weekly. Now, what are those two patterns? Well, the similar patterns in this case on the monthly of topping out here for being overbought. Again, the RSI measures something being overbought or oversold. If you guys want to learn a little more about it, I did a video on it on the trading tip series we do. But you can see here that we have a similar range where it looks like we may be bottoming here, where the RSI starts to push sideways, similar to how we peaked out at the same levels during each cycle. So going back here, you can see this was the previous market cycle for Bitcoin going up to around 11 to 1200 here. But along with that, we can see that we had a similar double top here on being overbought on Bitcoin. And again, as the peak was here, this was the last month we saw real green price action. And then after that, we started a bear market in crypto. So very interesting to see that on the monthly. Taking a look at the weekly, very similar in this case, but it's a different case scenario. You have multiple periods of being overbought during the bull market. So it's not usually good to use this as a gauge to pick up where you are in the sense of a bull market or where the peak is, but really where a bottom is. You can see that the last time here we had a double bottom here on the oversold area for the RSI. And it looks like we're very close to getting that second double bottom, or that second bottom, and making it a double bottom. So you want to watch for similar patterns in this case, and multiple retests of being oversold on the weekly in this case. If you can get 3 or 4, that's actually a really good sign, because it shows you that a cryptocurrency or a financial asset of some sort has been oversold for a while. It might be at a really good discounted price. So again, very important indicators to use. So those are some of the charting ones that I like to use. Now there's a fourth one that I would usually use on the chart, and that is volume. But I'm actually not going to use volume on the charts here. And the reason I say that is because volume is very, how would I say? It's very indifferent. It can be very rough to read, very similar to an order book. And the reason I say that is because in the cryptocurrency space right now, there's a lot of problems that you deal with when you're trying to measure volume in cryptocurrency markets. See, cryptocurrency volume can actually be quite artificially high. The reason I say that is because at the moment, there's a big rampant set of issues. There's issues with not only market making, which is basically, it's real volume to a sense, in the sense of the matching side of another trader. But along with that as well, you also have a lot of wash trading, which is not only an illegal activity, but is basically just people buying and selling the same financial product with 2 of their own accounts, meaning that there's no real actual transactions happening, but it appears on an exchange that something's happening. And sometimes this is used to manipulate price. It's sometimes used to create and print fake volume, which is very relevant in our case of trying to gauge where volume is. Again, we're in the wild, wild west. That's crypto for you. And it's not like it doesn't happen in other markets, but the major point here is that it's very hard to gauge volume in this case. So what I would say are the best 2 practices that you can use in order to kind of gauge where we are at the given moment is to find ways to measure dollar weighted volume, US dollar weighted volume across cryptocurrency exchanges that have a decent reputation. Exchanges like Coinbase, exchanges that aren't excessively caught up in the the competition of volume because they actually have a decent clientele, they have a decent base of users. And not to mention as well, you can take a look at broader indexes as well. I'm here on Coin Paprika and taking a look at the overall volume over the past year or two. And the major thing that I would say to keep in mind is to deduce about 33% right now, unless you're looking at a volume indicator that has clearly stated that they're going to remove market maker volume, that they're going to remove wash trading, and CoinMarketCap is actually working towards that. So I'd recommend staying tuned for that. They're actually going through the filtering process right now for exchanges, which I highly admire, because CoinMarketCap and a lot of the other platforms that people use haven't been doing that. They've just been pretty much listing, outside of a few exchanges that are quite obvious, they've been still listing a lot of market maker wash trading volume. So you want to make sure to reduce that as much as you can. Alrighty, so that's the fourth indicator. Let's go on and talk about the fifth indicator here, Bitcoin NVT, or net value transaction, or network value transaction. Sorry, or transferred. I always get that acronym mixed up, but basically, this indicator is very important. There's actually two ways to view it here. We're going to be talking about. And it's going to be between NVT itself, the simple ratio, and then also NVT signal. Now, I want to spend some time to really focus in on NVT, and we'll take a look at NVT separately in a minute, but I want to talk about NVT signal as well, because I think it's the preferred way of actually viewing this indicator. So in this case, from taking the ratio and the terminology that I brought up, basically what you're doing is you're taking the network value in this case. So in the case of Bitcoin, it's market cap, what we're valuing the total supply of Bitcoin as in, say, dollar terms, and dividing that by the amount that is transacted on a daily basis. Now, this indicator NVT signal is a little bit different. It is the same concept of taking, the value of the network, dividing it by what it transacts on a daily basis. But along with that, the important thing to take into mind is that this is actually using a 90-day moving average in this case for daily transaction volume. So it's the average over the last 90 days. It's not just yesterday's value in this case. And it can provide a much more easy to read indicator, not to mention a much more consistent one. We can see here, the yellow line here is a logarithmic chart of Bitcoin, and we can see that the bottoms here align very similar to areas that we see in NVT down around, this is somewhere usually around the 20 or 30 point range is usually where you're seeing things get over, in this case where you can find fundamental value in Bitcoin. And I can detail this in a later video if you guys would like. But anyways, this is generally the range. You want to see consistent historical levels where we can find actual fundamental value. It usually means, in a sense, kind of like the RSI, that it's oversold in a sense fundamentally, that there's a good amount of transaction volume for the valuation at that point. Whereas during bull markets are usually very overvalued. Right? We're not getting as much actual transactional volume. It's just people speculating and paying a higher price over the Bitcoin. So it's kind of like gauging a real value for this payment network that we're building out. It's a store of value. I absolutely agree. But at the same time, you need to find where the real fundamental value is for that store of value, right? You have to test those levels. And that usually comes with a decline in price and then also a boost at the same time in transaction volume. And if you get that, you'll get a lower level in this. Now, we're still at a range that's right under the 100 point range, which is usually a signal that markets are still a little bit overvalued. So what I think you're actually going to get here is a slight decline in price, which will help us get back down to these lows in December. But along with that, you're going to see an increase in transaction volume over the next few months. So we're not exactly there yet in the sense of the bottom, but it's definitely showing us that we've entered through a decent amount of the correction area that we need to see for NVT. And this is, again, the NVT ratio on a daily basis, and you can see that we're still quite high up there in the sense of the current one right now. Again, most people use NVT signal for my knowledge, but again, this is just as important of a thing to look at as well. And you want to see both of these quite low. And you can see here again the importance and relevancy as you can see the indicator was low down here, and you start to see the pickup in the market cycle. All right, so another important thing, I'll leave all the links down below for you guys to take a look at these as well. All right, so let's go ahead and talk about the logarithmic chart and what some people look at as the rainbow chart in this case. And basically, the logarithmic chart is a format of looking at cryptocurrency, price action over a longer term. Obviously, if you take a look at a standard chart, it's going to look like it's going parabolic if you take a look at the weekly or monthly. And the logarithmic chart really focuses on percentage increments in this case for cryptocurrencies. So obviously, $1,000 move in the early days of Bitcoin was much more imperative and game changing than Bitcoin moving $1,000 from 3,000, right? If it was going from 0 to 1,000 or $1 to 1,000, it's very different. So that's what the logarithmic chart really takes into account here. logarithmic steps in this case. So basically, let's go ahead and focus in on how to read this chart. It's very simple, actually. It's basically that you want to understand the rainbow channels here on the logarithmic chart and understand what it's basically saying. When you're getting in the higher bands here, it's tended that you're going to find that price is being overbought. Not to mention as well, that over time you want to see for a bottoming market that we're entering into the darker bluer ranges here on the rainbow chart. Now, one thing to also take into mind as well is that because Bitcoin is obviously working with much higher valuations when it's trying to move in the next cycle, you can see this was here from 2016 to 2018 and over here as well from 2011 to 2012. You can see that we're working with much larger valuations, and because of that, we are probably not going to be reaching the higher bands of the rainbow on the logarithmic chart as frequently. I really don't think you'll be seeing it that much. In fact, you'll probably be hitting lower levels here because as we're going forward in time, as we move to the next market cycle, this is where we move exponentially higher. We're moving to 30,000 to 40,000 to 50,000, hopefully in the future for Bitcoin. And even to six-figure digits for price. So you're going to be seeing much more time being spent down here in these lower bands, and also probably making lower highs on the colored rainbow chart in this case for the logarithmic chart. So very important to take that into mind. We can see it's slowed down its pace over time, but this is actually really good. It still shows that it has upside, and it's showing that it's becoming a much less volatile and much more longer-term uptrend market in this case. So it's good to see these kind of things, and this is important to factor into your trading as well. So very important thing. And speaking of volatility, this is another indicator I'd like to use. Now, there's a different few websites. Again, I'll leave the one I use linked down below. But on bitvol.info, you can basically find some really good volatility gauges from the 30-day volatility, 60-day volatility, 120-day volatility, but also 365-day volatility, which I like to use. And if you want to understand what this is recording, I have the description down here. And it's basically taking the daily open price over the amount of days that we're looking at. In this case, we're looking at 365 days. And it's basically uses the standard deviation of this. So basically, to put it in very simple terms without trying to get too technical, the more days you're including, you'll probably have less big of fluctuations because you're including a larger amount. But the more spread in those 365 days in price from their opens on the market, then you're going to have a higher level of volatility. This is similar to how the VIX is measured in traditional equities. So if we take a look here from all the way back in 2011, we have a lot of data to work with. This also tells us two things, right? The first thing to note is that Bitcoin over time actually has lower levels of volume. So you should expect in market peaks that you're going to have a lower level of volume at the peak here. So we can see, for example, the peak back here was nearing 10%, on the upper 9% range. You can see here we went to 7.4% and then 5.5 at the peak. And if you actually align this with the chart, you'll actually see that it lines up pretty nice with price in this case, that usually around the peak of volume, or as we're moving into the peak of volume, that, volatility, we tend to see a peak in markets, right? So as we're nearing a lower high in this case, that's very clear. You should be worried in that case. Now, another thing as well, in the sense of what we're really focused on is picking bottoms. How do we take this chart into account? What's a good measure in order to picking potential bottoms? Well, I usually say that I like to see lower volatility, and I like to see it well below the 3% range. As you can see over here, I apologize. Using it in this case right here, back here during 2016, 2017, we found that the market bottom in this case was really good to start looking towards in 2016, where volatility had broken below 3% in this case, right? Now, again, we might be able to get some kind of rebound, I think, below 4%, which we're now starting to actually move under. But I would say in this case, with how the market is going to be probably having a longer term push to the side, meaning the price action is just going to go sideways, I would look and settle for around 3% in this case. You want to get in the 3% range. If not, possibly into the upper 2% range, as we saw back in 2016 and 2017. So that's where my target range is for it. You guys can again interpret it in different ways you want, but take a look at the correlation on the charts and see if you see what I see in this case. I've given you guys the tool in this case, and I definitely want you to make sure you can make it your own in that case. Alrighty, so the last eighth indicator, not complex, is Google Trends. And this is simply a Google search for Bitcoin. Now, some people would disagree and say that you shouldn't look up Bitcoin when you're talking about Google Trends, that maybe you should look up crypto, or you should look up blockchain or something more broad. And that is true in a sense. Over time, Bitcoin isn't going to be the only cryptocurrency. There will be a variety of them. Whether or not they succeed or fail, or if you like, those other altcoins, they will exist and they do play a role. That being realized, Bitcoin is kind of the face of crypto. It is one of the better gauges because I know a lot of people who I've talked to who I say, hey, have you heard of Bitcoin before? And yes, they've heard about Bitcoin, but they haven't heard about crypto or they don't know what a blockchain is. So I still think it is one of the best indicators you can use in this sense. And the best way to actually use it is from the early days when Bitcoin was created. So I usually gauge it from sometime in 2008 in this case, when the Bitcoin white paper was released, and take it to where we are today. And interestingly enough, the Google Trends show us that we're currently holding around this 9 to 10 point range. Of course, the peak will always be 100 here in the sense of the time frame that you're measuring. But the way that I gauge this in this case is I want to see Bitcoin traffic on Google Trends to actually start increasing. Now, so this indicator isn't holding much relevance to me now. I like to see that it's relatively pushing sideways. It's not declining like it was back here after the peak run up in January and February. But what I do want to see more than anything before I actually have some positivity coming out of this indicator is for this to start moving upward, to get back up to 13 or 15 points, to start showing that people are interested again. And this can usually come in correlation with price. It's no doubt in the early days, guys, that you're going to find that. But when you start to see a real shift in trend, as we could start to see building up here, where it went from, for example, 6 to 15, this is when you want to start getting excited in the sense of the Google Trends in this case, when you're starting to see that we're retesting levels that we saw back here, back during the previous market cycle, right? So when we start getting some bolstering in Bitcoin search to double digits again, that's when I want to get excited. Alrighty, so we've gone through all of the 8 major indicators that I like to use. I know that there's probably 2 or 3 that I haven't been able to think of, guys, that just aren't hitting my head right now. I'm scatterbrained like that sometimes, but I think these are 8 really good indicators that you guys can use in order to gauge market sentiment and to gauge where we are in a market cycle. So now to answer the question that I think some of you probably wondered is, where do I think we are right now? I think, luckily, we have seen the vast majority of the sell-off here. We've not only matched in percentage decline to other Bitcoin market bubbles popping, in this case usually around an 80% plus decline, but along with that, we are currently in a very low volatile state. We are currently showing that we're in the blue line here, for example, within the rainbow chart on the logarithmic chart. And with NVT in this case, basically at a point where I think we really just need to see an increase in transaction volumes, as well as a tad bit of decline in price back down to the lows at 3,000. I think we're in the process of bottoming here. I think we're really just going to be pushing sideways for Bitcoin for a while. And even though that's not exciting, that doesn't mean that we have to be fearful of markets. We really need to see that bolster in volume. We need to see price action, in this case, cupping back up to the highs and breaking over a big even like 4,000. And then you get in line with that, the increase in the Google Trends, and you start to get into a line on the rainbow chart, the logarithmic chart, where it's one color higher. And NVT has some room to finally breathe because it's now lower. So these are the things that we want to see here, guys. And we want to see that, we're still keeping a historical correlation to the RSI and the monthly moving averages. So anyways, that's it for the video, guys. I hope you all enjoyed it. And if you guys have an indicator that you like to use, please share it down in the comments down below, guys. We want to share together. We want to learn together and definitely become better traders in the process. But I think these are really some great starting indicators to use if you're trying to kind of gauge the longer term of things. And I can, if you were to really stick with these things, probably in the next cycle, a lot of people will probably be able to play it better than we did on the previous one. So now we have a lot of this data at our hands to work with, and hopefully you guys can use this to your advantage. Anyways, that's it for the video, everyone. Thank you all so much for watching. Hope you all have a wonderful rest of the day, and I'll see you all in the next one. Stay tuned.